Here is a summary of TSMC's 2025 Q3 earnings call transcript, designed for easy reading aloud. Introduction. Good afternoon, everyone, and welcome to TSMC's third quarter 2025 earnings conference call. Today, we will hear from our CFO, Mr. Wendell Huang, who will summarize the third quarter results and provide guidance for the fourth quarter. Following that, Mr. Huang and our Chairman and CEO, Dr. C.C. Wei, will share the company's key messages. We will then open the floor for your questions. As always, please refer to the Safe Harbor Notice regarding forward-looking statements. Financial Highlights Q3 2025. Let's begin with the financial highlights for the third quarter. Wendell Huang, our CFO, will now provide the details. Good afternoon, everyone. Third quarter revenue increased by 6% sequentially in new Taiwan dollars, driven by strong demand for our leading-edge process technologies. In U.S. dollar terms, revenue rose a significant 10.1% sequentially to $33.1 billion, slightly exceeding our guidance. Our gross margin improved by 0.9 percentage points sequentially to 59.5%. This was primarily due to cost improvement efforts and a higher capacity utilization rate, partially offset by unfavorable foreign exchange rates and dilution from our overseas fabs. Consequently, operating margin increased by 1.0 percentage point to 50.6%. Overall, our third quarter earnings per share was TWD 17.44, a 39% increase year-over-year. Return on equity stood at a healthy 37.8%. Revenue breakdown Q3 2025. Looking at revenue by technology, our 3-nanometer process technology contributed 23% of wafer revenue, while 5-nanometer and 7-nanometer accounted for 37% and 14%, respectively. Importantly, advanced technologies, defined as 7-nanometer and below, made up 74% of our wafer revenue. By platform, high-performance computing, or HPC, remained flat quarter-over-quarter at 57% of revenue. Smartphones saw a strong increase of 19%, contributing 30% of revenue. IT increased by 20% to 5%, and automotive grew by 18%, also contributing 5%. Digital consumer electronics, or DC, decreased by 20% to 1%. On the balance sheet, we ended the quarter with cash and marketable securities totaling TWD 2.8 trillion, or approximately $90 billion. Our cash balance increased by TWD 106 billion to TWD 2.5 trillion at the end of the quarter. Capital expenditures Q3 2025. In terms of cash flow and capital expenditures, we generated TWD 427 billion from operations in the third quarter and spent TWD 287 billion on CapEx. In U.S. dollar terms, our third quarter capital expenditures totaled $9.7 billion. Guidance Q4 2025. Now, let's turn to our guidance for the fourth quarter of 2025. Based on the current business outlook, we expect revenue to be between $32.2 billion and $33.4 billion. This represents a 1% sequential decrease, but a significant 22% year-over-year increase at the midpoint. We anticipate our gross margin to be between 59% and 61%, and operating margin between 49% and 51%. Assuming an exchange rate of $1 to TWD 30.6. Key messages from management. Now, I'd like to hand over to Dr. C.C. Wei, our Chairman and CEO, along with Wendell, to share the key messages for the quarter and beyond. Thank you, Wendell. Good afternoon, everyone. Near-term demand outlook in AI. First, let me start with our near-term demand outlook. We concluded the third quarter with revenues slightly above our guidance, largely due to strong demand for our leading-edge process technologies. Moving into the fourth quarter, we expect continued robust demand for these advanced technologies. We continue to see strong AI-related demand throughout 2025. We are also observing a mild recovery in non-AI end market segments. Supported by our technological differentiation and broad customer base, we now expect our full year 2025 revenue to increase by close to mid-30s% year-over-year in US dollar terms. AI demand outlook and capacity planning. The AI market continues to be extremely positive. The explosive growth in token volume signifies increasing adoption of consumer AI models, which translates to a greater need for computation and thus, leading-edge silicon demand. Enterprise AI is another significant source of demand, and we are also seeing the rise of sovereign AI. As a key enabler of AI applications, our biggest responsibility is to prepare the most advanced technologies and necessary capacity to support our customers' growth. We employ a disciplined and thorough capacity planning system, working closely with our over 500 customers and their customers. Given the increasing complexity of process technology, customer engagement lead times are now 2 to 3 years in advance, providing us with a deep and wide view of the industry. Global manufacturing footprint update. Our global manufacturing footprint decisions are driven by customer needs for geographic flexibility and necessary government support, all aimed at maximizing shareholder value. We are speeding up our capacity expansion in Arizona, with tangible progress and excellent execution. We are also preparing to upgrade to more advanced process technologies in Arizona due to strong AI-related demand and are securing additional land for future expansion. This will enable us to scale up through an independent GigaFab cluster in Arizona. In Japan, our first specialty fab in Kumamoto has started volume production with very good yield. Construction of our second fab has begun, with its ramp schedule based on customer needs and market conditions. In Europe, construction of our specialty fab in Dresden, Germany, has started and is progressing smoothly, with ramp schedules tied to customer needs and market conditions. In Taiwan, we are preparing for multiple phases of 2-nanometer fabs, and will continue to invest in leading-edge and advanced packaging facilities. End-to-end A16 status. Our 2-nanometer and A16 technologies are leading the industry in addressing the demand for energy-efficient computing. N2 is on track for volume production later this quarter, with a faster ramp expected in 2026, fueled by smartphone and HPC AI applications. We've also introduced N2P with further performance and power benefits, scheduled for volume production in the second half of 2026. A16, featuring our superpower rail technology, is best suited for specific HPC products, with volume production also on track for the second half of 2026. We believe N2, N2P, and A16 will make our N2 family another large and long-lasting node for TSMC. Q&A session highlights AI demand and capacity. Management reaffirmed the very robust AI demand, even stronger than anticipated. While not providing exact numbers for CoWoS capacity expansion, they stated they are working hard to narrow the gap between demand and supply and are increasing capacity for 2026. They noted that AI-related demand is very tight across both front-end and back-end. CapEx strategy. TSMC consistently invests in capital expenditures based on identified growth opportunities. They aim for revenue growth to outpace capital expenditure growth, a trend they have achieved in recent years and expect to continue. A higher level of CapEx is always correlated with higher growth opportunities. Gross margin and overseas fabs. The gross margin dilution from overseas fabs is expected to be closer to 2% in the second half of 2025, and between 1% to 2% for the full year 2025, an improvement from previous expectations. For the next several years, dilution from overseas fabs is projected to be 2% to 3% in early stages, widening to 3% to 4% in later stages. 2-nanometer, N2 node. N2's structural profitability is expected to be better than N3. While new nodes will cause initial dilution, the corporate average gross margin is generally moving upwards, making the traditional time to reach average less meaningful. Competition and Foundry 2.0. TSMC's Foundry 2.0 strategy addresses the growing importance of system performance. Their advanced packaging revenue is nearing 10% of total revenue and is crucial for customers. Regarding competition, they noted that one competitor in the U.S. is also a valued customer with whom they are collaborating on advanced products. China market. Despite potential restrictions on U.S. chip exports, management expressed confidence in their customers' ability to perform and grow in the AI space, indicating that even with limited opportunity from China for the time being, their AI CAGR growth targets are achievable. Smartphone demand. Concerns about pre-builds in consumer electronics were dismissed, as inventory levels are described as seasonal and healthy. Smartphone revenues saw a 19% sequential growth. AI infrastructure revenue. While specific wafer demand per gigawatt of AI data center capacity wasn't quantified, management highlighted that both GPUs and ASICs utilize their leading-edge technologies, and they support all types of AI applications. The growth in token consumption is exponential, and TSMC's technology advancements and node migration enable customers to handle significantly more tokens more efficiently. Conclusion. This concludes our prepared remarks and the Q&A session. The replay of this conference call will be available on our website within 30 minutes, and the transcript will be available within 24 hours. Thank you for joining us today. We hope you stay well, and we look forward to speaking with you again next quarter.